This conference will now be recorded.
You didn't tell me to record the session. Okay. Statement of cash flows. There are 4 financial statements, and of course, the income statement, statement of retained earnings, and balance sheet. We covered Principles 1 in some detail. We now want to look at the statement of cash flow and what you need to be aware when we look at businesses. If a business start off with $100,000 in cash, its goal is to increase this cash through retained earnings, which is revenue minus expenses. So you always got to keep that in mind. Did the cash go up? Could be some other assets also. And did the earnings go up? And when you have a situation where earnings are going up, but cash is not coming up going up, then there's a problem. So always just keep that in mind. You start a business with $100,000. Your goal is to have more cash through earnings. The statement of cash flow is important because it provides information about liquidity and solvency for a company. Because we use accrual basis accounting, we may not be reflecting whether the company is liquid or solvent at times. And so we have this extra statement to do that. We look at the changes in assets, liabilities, and stockholders' equity. So when we're comparing firms, we can see, okay, what firms are liquid and which ones are not, which ones have a lot of cash. That's just key. We get some idea of the timing of future cash flows. Then it helps us detect the fraudulent activities where people are journalizing inappropriate accrual basis transaction. So they're making the transaction, but there's no cash involved. The cash flow statement has 3 areas: operating, investing, and financing. Operating is going to be where we have the net income and the current assets and current liabilities in the contra accounts. This is the main place we need cash. Investing activities is where we sell our non-current assets. So in operating, we're looking at current assets, and investing, these are long-term assets. Did we sell some or did we buy some? We would like a situation where the company is expanding and we buy some assets. Financing activities looks at funds coming into the business from investors, long-term debt. But the key is operating activities. Now, when you're looking at operating activities, each company will have different assets in there. You're just concerned with the total numbers in general. And I tell you as a guide, when you look at a company, this is a rough guide, you want to see sources and uses in operation, but with the net change being positive. If a company does not have a positive net change in operations, you know right away there's a problem. You prefer that the investments is negative because the company is expanding. And you prefer financing is negative because the company is paying dividends and paying off debt, and it has cash left over. This is equivalent to you as an individual. If you're working You got operations is equivalent to your salary. And so you want enough salary to buy some new assets when you graduate, pay off student loans, and have cash left over. Well, the business wants to be able to do the same thing. So this is a general guide in terms of, okay, does the company look like this? And when you're doing your cash flow papers, you're going to look at 3 years. What is the pattern of operations, investments, and financing, and the change in cash over a 3-year period? Is it looking like this, or is it looking different? Now, in the first course, we used that direct method. We just looked at the cash transaction types 1 through 11, and we could do a cash flow statement. But if there are thousands of transactions, that's not possible. It's not feasible. And so we derive how we can do this a different way by starting with the accounting equation: assets equal liabilities plus owner's equity. Then we expand it: assets equal liabilities plus common stock plus retained earnings. Then we pull out cash separate from the other assets. Cash plus other assets equal liabilities plus common stock plus retained earnings. Are there any questions on those first 3 transactions? Well, equations, really. Any questions? We're just going from the standard equation. Equation 4, cash equals the liabilities plus the common stock plus the retained earnings minus the other assets. So we've done what? Put the other assets on the other side. Then we separate the liabilities into current liabilities and long-term liabilities, common stock, retained earnings, current assets, and long-term assets. Then we do a final equation, the next to final equation, where cash, same thing, it's going to equal current liabilities plus long-term liabilities plus common stock plus net income minus dividends minus current assets minus long-term assets plus contra accounts. So we just gone from this top equation down here. And so we can look at the change of cash and explain the change of cash, delta, by saying the change of cash equals the change in all of these other assets. So that's the theoretical foundation behind the statement of cash flow indirect method, where rather than looking at each cash transaction, we begin to look at the changes in all of the other accounts. We looked at the changes in liabilities, net income, assets, and contra accounts. And we'll get the same answer in a much shorter period of time than if we had 10,000 cash transactions. So the change in cash for a particular year equals the change in all of the other accounts. And that's what you got to be able to do. Because once upon a time, when you worked for a company, they had a retirement, a defined benefit where you're going to get so much when you retire, and you're going to get Social Security. You were set for retirement. Then they moved to Social Security plus a profit sharing plan. So the company didn't have to guarantee the benefit. It would be based on earnings. Then they said, well, we don't want to guarantee anything. So they went to 401ks. So with the 401k, that's your account. And so you've got to manage it and be able to, put investment in there so you can retire. And they're saying Social Security will probably run out of them. They may do something like that you contribute so much of the Social Security that you have into a 401k also, just starting over. But you're not going to have uh, waiting for you at retirement a stipulated amount of money. You will have your own 401k account, and that's your retirement account. And you need that account to be at least $1 million, possibly $2 million, because if you were to get 5% a year on $1 million, that's 50,000 for you to live on at retirement. It may take more. So you want at least $1 million. So you've got to be able to look at companies that you're going to work for and that you're going to put in your 401k that are going to be profitable. And the statement of cash flow helps us to do that. Now, we said that the statement of cash flow is going to be based on the changes. The change in cash is going to be based on the change in the current liability, long-term liability, common stock, net income, dividends, current assets, long-term assets, and contra accounts. We need to see what part of the statement are the changes going in. Current liabilities go in Part 1, operations. Long-term liabilities go in Part 3, financing. Common stock goes in Part 3, financing. Net income goes in Part 1, operation. That's where it's supposed to be. Dividend goes in Part 3, financing. Current assets go in Part 1, operations. Long-term assets go in Part 2. And what we're trying to make sure of that we're looking at, number one, did you increase your long-term assets so your business is expanding? Or did you sell some of your operations and you got cash? It's like Macy's selling some of its stores. If it sells the stores, it might have cash this year, but it won't have it later. So when we have non-inventory assets, long-term assets, their activities are in Part 2 and contra accounts in Part 1. And this just might be a table you might want to make a hard copy of. You might want to make a hard copy. Then we get into, is it on the source side or is it on the use side? So we have this template. So we're saying where everything goes, okay? It's saying where it goes. There's a source side, there's a use side, and the net change. In operations, if you have net income, it's on the source side. If you have a net loss, it's on the use side. If the current asset increases, it's a use of cash. When you buy a cell phone, your cash goes down. But if you sell your current assets, then it's on the source side. So this is where our accounts receivable, inventory, things like that going to be. Current liabilities operates just the opposite. If the current liability goes up, then that's a source of cash. Just like if you get a student loan, that becomes a source of cash. However, when you pay on that student loan, you have to use cash. But when you get the loan, it's a source. So you have to think differently. Finally, for loss on the sale of long-term assets and gains on the sale of long-term assets, because these are non-recurring transactions, then the net income, we don't take them out. And we'll show them in Part 2. But you don't want it to look like the company has cash from operations when it sold some assets that are non-recurring. It sold land, it sold some of its stores. That income is not going to be there anymore, plus other income is not going to be there. So you have to be concerned about that. And finally, we have cash flows from financing. If you issue common stock, it's a source. If you buy stock back, it's called treasury stock. You can't buy back the common stock and call it that. You still have to always show what was put in. So if you buy stock back, is in an account called treasury stock, which has a debit balance. If you receive a long-term as liability, it's a source. When you repay the long-term, it's a use. And then when you pay dividends, that's a use. So we've covered where we're going to put all of these items, and we're going to look at the changes in all of these items to come up with the change in cash. We're going to look at the changes in all of these items, and we're looking at the changes in operations, uh, investing, and financing. And once again, we want the cash flow from operations to be positive. If this number is not positive, then you have a problem. Or as we looked at that case, if you got a lot of net income but limited cash operation, that's a problem. We would prefer part two to be negative, which shows your company is expanding. So you had enough cash here to expand. You also had cash to repay long-term loans and pay dividends, and you had cash left over. So let's look at how we're going to make the calculation with this example. And in this example, we have the income statement and we have the balance sheet. Okay, so that's what you have. And so you're going to prepare a statement of cash flow. You're going to prepare a statement of cash flow by looking at the change in cash and then looking at the change in every other asset on the balance sheet. Now, what I like to tell students to do, since this is just so much and so involved, let's break the problem down some so we can get some of it right. So the first thing, when you see these statements, the first thing I want you to do I want you to put the change in cash in. That's the answer to the problem. How much the change in cash was. So that's always the first thing I want you to do in preparing a statement of cash flow. Put the cash in. The second thing I want you to do is to go to the income statement and put in the net income or the net loss. You won't have both of those. That's the second thing I want you to do when you prepare a statement of cash flow. So you got part of the operation done. The third thing I want you to do is to put in your depreciation, which is a non-cash item. Then the fourth thing I want you to do is to put in the dividend. So you don't have to be frustrated, okay? You don't have to be frustrated. Go and you determine what the change in cash is. You put that on the problem first. Then you go to the income statement and see what the net income is, whether it's a net income or net loss. And you make that the second thing you do as you go to this template. The third thing you're going to do is put in depreciation expense. And the fourth thing you're going to do is put in the dividends. So when you can do those four things, then you got to see on the statement cash flow. So if you saw this cash flow statement and you could do those four things, you'd have a C. So let's see if you all can do that. So do y'all have cash flow statements anywhere? You got this template. You should have this template on
Yeah,
the
we have.
y'all got the template, right? Because it's on that spreadsheet.
I got the template, but that problem that you just had on your screen is not on the list of problems that's on Blackboard.
Well, it's the example. So that's why it's not in the list. We're gonna work an example. So what I want y'all to see, if y'all can do those four things I just told you to do, does everybody have a template? So see if you all can do what I told you to do, which is 1, 2, 3, and 4. And if you can do 1, 2, 3, and 4, you got to see on the exam or quiz. If you can just do 1, 2, 3, and 4. Remembering that we got to look at every account, but we pull some out so we can get started and not be completely frustrated. So I'm gonna give you all 5 minutes to do those four things. Does everybody have a template? Okay,
Yes, sir.
everybody got a template. Okay, your time is up for your C. So you have 5 minutes to put all of those in. So the first thing, and what you got to do, you got to look at every one of these accounts. Remember, the change in cash equals the change in all the other accounts. So what's the first number you all have down on your template? What you got right here?
0.
0. Thank you. So at the end of the day, when we look at the changes in parts 1, 2, and 3, it's got to net back to 0. 0 is the answer. So come through here, strike it. We got that account down. What's the second thing I told you to put down?
Net loss or income.
So what do you have?
Net loss.
You have a net loss. So we're gonna come up here and put in what?
75,000.
Yep, that's all you're doing. Okay, so we don't have this. What's our depreciation?
25,000.
5,000.
And you can get that number 2 places. We got it here on the income statement. Or you can look at the change in accumulated depreciation. But that change is 25,000. Y'all almost to y'all see. All you got to do is tell me the dividend.
I didn't see any.
You didn't see any dividend?
25,000.
How'd you get 25,000?
The net change in retained earnings minus the net loss.
Okay, we know that if we were doing a statement of retained earnings, see if I got a place to put that. It would look like something like this. The beginning balance in retained earnings was 300,000. We had a net loss of 75,000. So we're gonna have a minus 75,000 here. It's gonna jump down on. Then we have the dividend, which we're trying to solve for. So that's what we're looking for. And we have ending retained earnings, correct?
Yes.
And that number was what? 200,000. So we wanted to do a look out, a little thinking and everything. But remember the statement retained earnings, beginning balance plus income and less loss minus the dividends equals the ending retained earnings. So we know beginning and ending balance and the net loss. What must the dividend be?
That's 25,000.
$25,000. So, we wanted you to just to put up the structure of the statement of retained earnings so you could pull it out. So with that, we have our dividend. And we have our C. Now let's see where we are on our account. Remember, we had to do all of these accounts. So we now have done accumulated depreciation. And we've done retained earnings, because the change in retained earnings is simply net income or loss minus a dividend. That's the change. So all of those accounts that we striked through, we finished those. So that's just a way for you to get some key things down and get part of the problem work. I put down my change in cash. That's the answer. Then I put down my net income or loss. I put down my depreciation. And I put down my dividends, and that covers retained earnings. So that's just a way to start it. You can work it any way you want, but most times that can be a help. Let's go to account receivable. So now we got to do all the other accounts and strike them out. What happened with account receivable?
It decreased.
It decreased. So when an asset decreases, is that a source or a use of cash? Well, what section we're going to be in first?
1 for current assets.
1.
Section 1, operations. And we said if there's a decrease in a current asset, then it's a source. So how much was our decrease?
25,000.
25,000. So all we got to do, got account receivable in here already, so it decreased, so we're gonna put 25,000 as a source. Now we got account receivable done. We can strike it. Next is inventory. What did inventory do?
Increase.
Increase in assets.
What part of the statement is it gonna be in?
1, because it's an asset, a current asset
Source or use?
for use.
It's gonna be a use. So we're going to strike out inventory. And that 150,000 is going to be on the use side. What's our next asset? Equipment.
Yeah.
What did equipment do?
Increase assets.
100,000.
What part of the statement is it going to be in?
Operations.
No.
Oh, long-term assets.
Long-term assets are always in part 2. Inventory and receivables, they're always in part 1. So we're going to go ahead and strike the equipment. It went up by 300,000. And we're going to come now, template, purchase of long-term asset, equipment, 300,000. use. Any question? When you buy the asset, cash goes down. When you sell it, it goes up. Okay, so we only have one other asset to look at, right? And what asset was that?
Stock one.
Investment.
And where's the change gonna go?
3.
Where?
3? No. I don't know.
No. When we sell long-term asset, that goes in 2. Now notice the gain on the sale of the land is already in the income statement there. And so we don't want it here. The net loss from operations is what we want to see in operations. And so we're going to come up here and have gain on the sale of that IBM stock. And we're going to put that 25,000 here. So this negates the fact that it's up in operations, because the net loss should have been 100,000. But when we put this over here, it gets it to 100,000. So if you have a gain on a long-term asset, it goes in the use part because we're trying to knock it out. If you had a loss, it goes in the source part. We're getting that element out so it can come down here.
Okay, Mr. Bott. If the equipment, if the asset is still in use, where do we put it? I mean, like this.
Another long-term asset. We're talking about an investment in IBM stock. So let's look at the investment. Originally cost 50,000. We don't have it anymore. We had a gain of 25,000. So how much cash did we get?
75,000.
You got 75,000. You bought it for 50. You had a gain of 25,000. So now we can strike this out. And we're going to put the cost plus the gain, 75,000. That's going to go here.
Okay.
So the net change in that account was 50. So we had 25, that was a gain, 75 was a cash proceeds. So we still net back to our 50 change. So just doing the change is 50. When you take out, when you put in the cash proceeds of 75 as a source and you take out the 25 gain as a use, it nets back to this change. And now we have all of the assets done. We're almost finished. Let's go to accounts payable. Where does accounts payable go?
Part 1.
It goes in part 1. Is it a source or a use? Accounts payable did what? It went down, correct?
Yes.
So what happened to your cash when you pay on your student loan?
It decreases.
Okay. So this is going to be a use. So accounts payable So we had a decrease in it. If it increased, it'd be on the other side. Okay, we're getting toward the end. Long-term bond, what did it do?
Increased.
Increase.
What part is it going to be in?
3.
It's going to be in 3. Source or use?
Source.
It's going to be a source. So the long-term bond is going to be in 3 as a source. And finally, I think we're at common stock. What did common stock do?
Increase.
Increase. So what part is that going to be in?
3.
Source or use?
A source.
Going to be a source. So now we've analyzed all of the accounts. And if you were doing this without this pre-developed template, you could say it's difficult because I worked on this and got your template, it's pretty easy. Now the question is, do the changes in the 3 categories come out to be 0? So let's look at part 1. Total sources is what? It's 25 plus
50,000.
50,000. What are the uses? At 300,000.
300,000.
So our net change is going to be what?
250,000.
A minus 250. So we know right away this company, we sort of knew it in the first place. But notice the change in cash is not 75 in operation. That's not the change. The change is a minus 250. So it's much worse than it looks. Let's go to the second part. We got 75,000 and 300,000. So our change here is what?
Negative.
Minus 225,000.
Minus 225. Then let's go to the bottom section where our sources in part 3 are what?
500,000. And 25,000 is 475,000.
There's a minus 250 plus a minus 225
Which is
equals
4.
475.
Yeah, minus 475 gives you 0.
Okay. So what do you think of this company now?
It's a bad company.
Why?
It's evening out, and it shouldn't. They cash. They operation should be positive, not negative. The investments is good. It should be negative, but the operation should be positive, if anything. And then the change in cash flow should be positive instead of a 0 balance.
But what did they do in effect? They went out and borrowed a bunch of money, which they got to pay back. And they did what? They bought some equipment. They bought a lot of inventory. And so when you buy inventory, if you don't sell it, you still got to pay for it. You got to pay your accounts payable eventually. So that's what you're trying to do now. So with this template, there should be no problem by any team working the problem assigned. Okay, so are there any questions on what we've done so far?
So them problems that you assigned, even though some of our names aren't on it, like if somebody on there that's in our group, basically that's what our group's supposed to do if they name on there.
Yeah,
'Cause
you're
that's
doing it as a group, as a team. So the way this
okay.
should work is everybody should work on the team, work it separately. Then you bring it together to get the final correct answer. Okay? So everybody on the team works the problem together. And then after you work the problem together, then you compare. Does that make sense? So can we work a statement of cash flow? Does everybody know what team they're on? Do you know your team number? Send them their team numbers again, Dominique, one way or the other, so they know what their team number is. And so when we get to the problems, team one is working problem one, team two is working problem two, team three is working problem three, and so forth. Plus, you've given me an analysis of, is this a company you would invest $1 million in?
Okay, so we not doing it by the names that you put on the paper. You remember you uploaded something and it got like people last names on there. So it's based off of the. Okay, it don't matter. I'm gonna send it to them. It don't matter. Okay.
So what we're saying is each team has a problem. So once they have a team number, that's the problem they're working. So how many teams are there?
8. It's enough problems. It's 8 teams and it's like 8 or 9 problems. So that's
Okay,
fine.
so every team has a problem. So what I want to happen now, I want each person to get their problem that their team is doing and do those first 4 things.
Oh, wait a minute. I ain't even sent it to them yet.
What?
Oh, I didn't even know I was on loud. I said, give me a second. I haven't even sent them the team numbers yet. So that they can know what problem they on.
Well, give them their team number. They're anxious and ready now to proceed. Right, Chester?
Yes, we're ready.
So you ready, Jacob? You're not gonna let them fool you and get your mother's $1 anymore, are you?
I'm about to send it to y'all, but listen, if you on Summer Chester team, then you in group 1. If you on Brittany Hall team, then you in group 2. If you on Jacob Bay team, then you in group 3. Darian Lee team is in group 4. Raw Runoso with Megan Scott and them, y'all group 5. Grace Wilson is group 6. Jennifer Hong is group 7, and then my group is group 8. I'm gonna still take a picture and send it in the group chat for y'all though.
Well, she'll put that in the group chat so you know your number. So what I want everybody to do is to do those first 4 things. You're going to have the same type of information, an income statement, and you're going to have a balance sheet. So you're going to analyze those first 4 things, and you're going to analyze everything else. Now, when you do your individual research paper, you're simply concerned with totals in operations, financing, and investing. So they have all kinds of accounts in there, but it really doesn't matter. You just need to look at the total line for operations, the total lines for investing, and the total line for financing. And then look at that over a period of 3 years and determine whether you would give that company your $1 million. So we clear on that now, Dominique?
Can you say that one more time? I'm sorry.
When you do your statement of cash flow individual paper, the only thing I want to see are the total. You aren't making any calculation. The company has it in there. You're telling me the total in operations. This is one number. The total in financing, investing, and then the total in financing, and then the change in cash. These are the 4 numbers you don't need to see the detail. Okay? You just for each year, what's the total in part 1? What's the total in part 2? What's the total in part 3? And what's the net change? Look at that pattern for 3 years for the company you've chosen, and say whether you would give them $1 million or not. So you should have examples of that, correct?
Yes, we have the one example that's on Blackboard, and that one example on Blackboard is just as confusing as when you Google it. Like, I'm on it right now. I just pulled it up. Hold up, I'm trying to pull it down.
What about in the primer? Are there any examples in the primer?
Oh, not that I saw. Not the way that it is on the example that you gave, or the way that it is when you Google it online, how the numbers are anyway.
That's okay.
They have it broken down.
So here's a cash flow research paper that a student did on GE. And they put, the student put other things in. But the bottom line, he has over a 3-year period what the net income was. Then he has the cash flow from operating activities. Then he has the cash flow from investing activities. He didn't have to have the others, he put them.
Okay, that makes
Then he has the cash flow from financing activities. Then he has the change in cash. This should be in the primer. And he says, so you do a little history on the company, not long. Then he said, I've chosen this company to demonstrate what poor management and bad financial decision making look like. See that, Jacob? And he writes a whole lot. I think he had planned to go work for GE until he did a statement. He got upset with him.
Yeah, I was gonna look at my.
Say what?
I was thinking about looking up my job's financial stuff.
Okay, that's what you want to do. Where you work?
I work at Therapy and Beyond. It's a healthcare clinic for autistic kids.
Just have to make sure they got published your financial statements. Now, there is no right or wrong way to do it. You got a guide. The key thing I want you to do is to analyze those key areas and say whether you invest $1 million or not. So you're not copying what somebody else has done. You're going through as if I was going to work for this company, what do their cash flow statements look like for 3 years? Because when you go work for a company, you make a major investment. Because if they go belly up, a lot of your 401k stock is typically in the company you work for. Okay, so you got to be able to choose a good company. So there's no set way to do that. No right or wrong way. You got some guides, you do your own thing. And it should not take you a long time. Does everybody have their 4 things done on their problem?
Are you speaking of the one we just did with you?
No, I'm talking about the one that you have been assigned.
Oh, okay.
Remember, there were 8 problems.
Okay, where's those problems? They're in the blackboard. Okay.
What is it under?
It's under course content.
Go to
It's
cash
called,
flow statements. I put everything that relates to a particular area in the same location.
It's called Statement of Cash Flow Problems.
Correct.
That's the one that we're doing now. So this one, is this the one that's due next Thursday, the team?
That's due Tuesday. Yeah, it was due this
Oh,
Thursday.
sorry. Yeah, my apologies.
Tuesday.
So what about the individual then? Because I missed on
That's
Tuesday.
due next Thursday.
Oh, so y'all switched it. Okay.
Oh, yes, right. You weren't here. Yeah, we just we didn't get as far as we wanted to. So being the nice guy that I am sometimes, and with Dominique just complaining with a whole host of amens with her, we said we'd take a little more time. But I expect that once we go over your problems on Monday, you'll know how to do it. So everybody's working a problem, but then you're responsible for all 8 problems. So you go and practice on some of the others in preparation for your first examination on next Thursday.
oh wait.
Clarify what you just said, right? So,
We're
pause.
gonna have
I'm lost. Wait. Okay, wait. I'm sorry. I'm
We're
lagging. Is it just one problem that we gotta do, right? It's not like all 8 of them. That's due on Thursday.
But he's saying you don't know what your quiz gonna be or what your exam gonna be, so you need to do all
So
8
on
problems.
Tuesday,
Oh my gosh, why are you so confusing, Professor?
on Tuesday, each team will work their problem. They're presented. Then hopefully they will share it with everybody else. Or you can look at it and get it so that you can practice on additional problems. So you would work your problem. You'll have solutions to other problems.
So we got an exam next week.
Next Thursday, we got to get the managerial accounting.
Jesus. Okay.
Once we go through this, you'll see. You got a template. I told you all you needed for a C. Right, Chester? Can everybody get a C, Chester?
Yeah, so
Okay. Nicole, can you get a C?
I'm sure I can make that happen.
Jacob? Can you get a C?
We can get that C. We can
Okay.
get that C. Or
Get a C.
or maybe a B is, if hey.
I don't want no C. Jesus. I gotta get up out the ground.
I'm in debt. Okay, so let's see.